Hey traders, and welcome back to another Elliott Wave Dose live session here on YouTube live stream that is. My name is Richard, and obviously I will be your host for this for today. We're going to take a look at multiple markets. We're going to take a look at metals in particular, and then we're going to switch off to crude oil. But also, I'm going to basically follow up today on one of the most important things, which is basically the volatility spike. I'm going to follow up with that because the indices have indeed, have fallen from the most recent live stream, last week's live stream. That is okay. I've been obviously updating that with the members in the trading desk room, but also in the green room, but also obviously posting updates on the website. So we're going to take a look at that, and then we're going to basically follow up with the Forex majors as well. So stay tuned and we'll get started straight up. Okay, once again, this is Richard, your Elliott Wave Jedi. We're gonna have a live stream today. This show obviously is called the Elliott Wave Dose, and today, as the name says, I'm gonna give you that Elliott Wave Dose technical analysis session right here on the spot, live on YouTube, just the way you guys like it. So let's just kick things off here with metals, gold, okay? Because from what I was actually saying previously, we've been taking a look at gold, and I've been saying that we might as well bounce off the 1910 1920 area. Why is that? Well, because I was taking a look at some patterns which I actually disclosed and mentioned and shared with you guys, with all of you guys, right about there. Okay, in the previous session. So as you guys know, for those of you who are new, I've been actually trashing gold right about there, and basically right after that I became bullish because I noticed basically the free wave sequence on the downside right there, right after that. So that being said, after this third wave, right about here, I mean, after this free wave swing, so it's a free, okay? Now, because this is a free wave swing, right there, okay? Well, it kind of paves the way for multiple patterns, which I actually explained previously as well. We have a running flat in this, okay? So we also have a free right here. So the sequence is until now free, free. Also, we have a free here. So free, free, free. Okay, like this. And then we have another free. So free, 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 free. And another free. Wow, right? So what is this telling us? Well, first of all, the how I'm labeling gold right now. This is a 2-hour chart, by the way, guys. Okay. So how I'm actually, labeling gold right here is in a contracting triangle, right? Now there are different interpretations, which I will actually explain. But so far, the way I tracked this and the way I actually, labeled it has been working out. Now, the only thing that I don't want to see is obviously something lower than 1910 right now, because this is supposed to be the actual support and the actual breakdown right there. Okay. And by the way, guys, should you have any questions, if you wish to interact right there, there is the live chat for the live stream on the YouTube live, or there's a question box, wherever you're looking at this, wherever you're watching this right there. Yeah, just make sure you type in. We have some familiar faces right here. Oleg, always good to see you, bro. Yeah, good morning to you too. Good morning to all traders. Yeah, Soto, hi, bro. Yep, I'm a very good man. This is the third time you're saying that to me. Thank you, son, Jeff. Thank you, bro. Okay, welcome guys, welcome guys. If you have any questions, I'm gonna be taking a look at the chat section right there. Write in your comments. Don't be shy. If you wish me to take a look at something in particular, if you have any questions, just shoot them right there, so we can actually have some interaction. Now let's just continue. Okay, so with gold right about here. Now I'm labeling it obviously as a triangle. Now, because of what I said before, free, 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 okay, this kind of opens the door for a little bit more, more patterns to be unfolded. There are two bearish patterns in this type of sequence, which I'm actually eyeballing and taking a look at to actually distinguish whether or not gold is actually going to do this before it shoots. Okay, that's the point. Now, the other thing is that this triangle really looks like, it really looks like a triangle right here. So any way you put it, if we do break out of here, then bye bye, say, thank you for the beers, let's go up, right? That's what we want, that's what I want as well. So given that said, okay, let me tell you what patterns gold can actually unfold in right about now. So the first pattern that I'm actually gonna basically say is just, as the way I'm labeling it, A, B, C, D, E, because we have free, 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 right? And with the price action contracting towards the downside, gaining support, and so on. Plus, we have a potential leading diagonal right here, right, which can be 1. Well, in a 2, okay, we'll need a 61.8 retracement of this rise just for us to actually shoot, right? Because this is going to be super, super bullish. Now, yeah, that's basically, wave 4 has finalized here, and we're basically shooting on the upside for the 5th, which is what we want. Metals love the 5th, and it's actually a wonderful motive wave, let's say. Even if it's a diagonal, it's still basically going to be bullish right here. Hey, Thomas, how are you, bro? Brent. Okay, I'm gonna take a look at WTI. Not gonna take a look at Brent today, but it's practically the same thing. So you'll be able to catch on something, right? Yeah. So let me just continue here. The next pattern, right, will be a running flat. In a case that yes, free has ended there, and we're having a okay, and then we have basically a W right here, X right there, and then we're doing this A, B, 1, 2, 3, 4, 5, but we will basically exceed this top just because we want to have a running flat right there. So this is A, and that's going to be B right here, AB, and then the C wave on the downside, thus touching this obviously spot, and then shoot on the upside for the actual 5th. So in this case, the 4th wave will be will be a little bit delayed, but it's still going to be a running flat, and the view is still on the upside. Okay. Now, the next pattern would be an ending diagonal, because it can. All right. In this case, 1, 2, straight up, and then we just have A, B, which can still be a triangle, by the way. Okay, by the way it looks, this triangle might be like this: A, B, C, D, E, boom. So in which case the 61.8 should still hold. 61.8, 78.6 Fibonacci retracements of this rise should still hold for the upside. So A, B, and then we're shooting for a C in the free for the ending diagonal, right? 1, 2, 3, 4, 5. So you see the sequence is almost exactly like the running flat one, as I actually said before. Now another one, okay, so these are 3 bullish patterns until now. The bearish one, okay, the bearish pattern would be A, and the triangle is inverted, which is basically, what I'm eyeballing right here to actually distinguish if. But because I have this is kind of fading for me right now. So I think that we're going to shoot on the upside. But just in case we don't, okay, A, B, C, D, E, and then this is B, we're shooting down for the C. That's the That's the most like bearish pattern, in which obviously we're going to breach this and we're going to have 100% of A and B to shoot for the C equality of A with C. If it makes any sense, you can just type in the chat box right there. If you have any questions, obviously you can do that as well. Now, the last one, because we've seen this before, and I'm going to go on the daily chart for this, okay, for you guys. We have A, we have B, and then we have, because it can, all right, and then we have 1, 2, 3, 4, 5, but it must exceed this a little bit, okay, in an ABC ending diagonal right there. How can that look like? Well, I'm going to show you an example and a fractal of what happened previously right about there. So let me show you the pattern. Okay, it's basically this one right down there, right? A, B, 1, 2, 3, 4, 5. And then the bull trend actually started. So you can actually see it. Yeah? Okay, that's the first pattern. The other one is basically this pattern right here, A, B, C, D, E in the fourth wave, in which case we're going to exceed that, go down, then up again, right? You can actually see what I mean. It's right here in front of you, right? So what we're looking for is most likely this, guys, okay? I don't think we're looking at this, but just in case we do, we know exactly how to act in the future. So yeah, now let's just basically follow up with this. I mean, on this daily chart for gold, right? We went on the upside. It is a leading diagonal in a first wave cycle degree black, which is basically this one, right? So we had a 3 and then 4 running flat right here, fifth wave, boom, 2, right? Because we have 1, 2. But then we went on the upside. How did we go on the upside? Well, we have a major contraction period right here, and now we have a potential triangle, and it's still like, you know, channeling, and most likely, guys, we should gain support right here, because if it breaches this right here, it's kind of the end of the line for gold, right? Is it? I don't think it is. I don't think it is with everything that's actually happening right now. So I'm actually aspiring, I'm continuing to aspire to, long gold, because that's how this pattern is actually, pointing me to do that in a wave 4. So the sequence is 1, 2, 1, 2, 3, 4, 5. So 3. Now you see where the other pattern comes from, right? And then 3 and then 4, right? Gaining support right here. Boom, fifth leg, big crash, right? Because that's going to be the fifth. 1, 2, 3, 4, 5. A, B, C, right? So, as a matter of fact, yes, after we hit like 2,300, something like that, maybe even higher, then I would be expecting 1,600, 1,500, for a big move down on gold. But that's when the indices will actually start rising, and, the VIX will most likely continue on the downside. But right now the VIX is actually a threat. So I have 3 patterns right here, and I'm going to shoot a question here for the ones who are actually present in this live stream. Guys, come on, I need everybody to chip in right here with their own opinions. I have 3 patterns, 3 fractals here on the right side, okay? 1 pattern, 2 patterns, 3 patterns, okay? I need you to tell me, what do you think the pattern really is? Number 1, number 2, number 3, okay? So just go type in that question box right there, okay? If you believe that this is the pattern, which is basically taken from here, I mean this one, which is taken from what I shown you with the triangle and then the upside, and this one from what I shown you from before the upside, right? So let me just do this again, okay, like this. So this is this, this is this, this is this. Which one? because all of them are actually, showing continuation patterns. But anyhow, which one do you think it is? Because it's important for us to actually establish the next trend, right? So Jorg says number 3, Balas says number 3, Oleg says number 2, Zarni says number 3, Thomas says number 3. So we're basically, you guys are actually more bearish right here for this gold, right? I mean, for the pattern to actually say. It takes a keen eye on this. I'm not gonna say that I'm gonna be favoring, actually I do. I will. I am favoring number 2 because number 3 is not confirmed, and we have, I mean, on the smaller time frames, yeah, we have some price action going. And guys, come on, if we shoot up right here, and let me just tell you a quick example, okay? If we hit higher, something higher, price action, like, intraday and stuff like that, something that you guys, I know you love, right? If we hit something higher than this, right, which is, I mean, let me just, you know what? Let me just give you an exact point, okay? So let's just do this. Now, if we do hit something higher than 1966.53, then you can say goodbye to that. Yes, Travis, exactly, number 2. So you can say goodbye to the, if we hit something higher than $1966.53 for XAUUSD, then we can actually say goodbye to number 3. I mean the third pattern, because it invalidates it in a sense that we will most likely do, okay, let me just disable this. Okay, cool, we're back on track. So if we shoot something higher than this, we'll most likely gain support here and then just be booming for that 5th. Not that it will be super rally or something like that, but still, guys, it's a 20k trade with one lot. That's what I want with these ones, right? So it's not that bad. I mean, depends on the lot sizes and stuff like that, but hey, it's a 20k trade with one lot, just to give you an example. Will it do this before? Does not have to. Do I want this? Do I want it to do this before I add? Yes, because I am active. I mean, you guys know me, and the ones who have been following me so far, then I've been actually actively been bullish right here and here, okay, with these levels, 1945 and 1910. So I got something on the upside with this. I got something on the upside with this, okay? I'm continuing. Now, do I want this to break out? Obviously, because, I want to get this pattern over with so I can actually, move on to the next stages and actually track my money. Yeah, moving stop losses to break even, adding, stuff like that, tracking and maintaining the trades, which is, in my personal opinion, the most important thing. Taking a trade is not everything. Yes, a proper analysis is indeed, a must, but you also need to maintain your views, maintain your trades, track your wave counts, track your analysis, doubt it, this, counter it, etc. So just like what I'm doing right here. So you need a higher accuracy, but mostly the second best thing and the most important thing after you actually take a trade and you do the analysis and you enter at a good point and stuff like that is maintenance, money management, putting stop losses at break even once you're in the green, knowing when to put that stop loss to break even, knowing when to take profit, knowing when to stop, reassess, take a pause, take a better look. Just because you're in the money doesn't mean you're always going to be in the money. It can go, just like that, bow, stop loss, stop that break even. What are you going to do then? Right? I mean, you have to take it again, but will you? Will you take it again? Are you going to doubt yourself after that? Because most probably you will. Happens to everybody, happens to the best of us. I'm speaking from experience, happens to me as well. There's no need to be ashamed of this. We are, traders, we are trading, we are taking a look at the markets. We are trying to find the next best interpretations which actually fit our needs in order for us to have the less risk and the highest expectations for our swings, moves, etc. Right? That's what we do. Now, um, hi Akila. Hi. Good afternoon. I'm taking a look at these messages. Yep, retest. Oleg says he's expecting 1935 as a retest. Should break up 1969, which is key. Yes, agree. 1969 is key right here. Okay. Yep, I do agree with you. 1969 is key right there. You're also taking a look at 1935. Which, yeah, I mean, yeah, that's the 61.8, which I'm actually eyeballing right now. As I said before, man, it doesn't need to do that, but really, as the way this pattern looks right here, it should, because it's actually this one right here on a larger scale. Let me just delete things so you can actually see what I mean. This to be this. So you see, one more leg down. One more leg down. That's basically what I need for me to have a higher confidence, right? If you're super aggressive here, then obviously stop losses, I mean, if you're buying, stop losses should be placed here. But there is a chance that you'll get stopped out and then it goes without you, and then you're like, bah, bah, bah. It's okay, right? That's what, it's part of the game. But the higher probability obviously would come from this stop loss here, obviously, because it, one, if this is a 2-second wave, must not travel, more than 100% of wave 1, right? So in this case, we have ourselves a trade. That's what I'm hunting for, to basically add at specific strategical levels as well. Hi Elias, hi bro, what's going on? Bro, long time no speak, man. What's up? Yep. Cool. Now, for gold, right? The key level is basically just like the fibs actually tell you, 1929.31. Now, obviously, when we open a trade, when you're looking for an entry, stuff like that, 61.8, whatever, right? Take a look at your spreads, calculate your spreads, because the last thing that you want is put a limit order right there. It hits it, but the broker has your spread and something like that, does not fill it, and it goes without you, right? So put it a little bit higher, just for you to make sure that you're in. Yep. Okay. So that's basically what I wanted to say for gold. Last look on the daily chart before you go. For the ones who are just joining right now, I'm gonna repeat. There's a chat box available right there. Shoot me your questions. I'm not just gonna stick with gold today. Don't worry, guys. I'm going to basically cover most of them. I'm also going to go on indices, which are very important right now. I'm going to go on VIX, Dow Jones, S&P 500, NASDAQ, DAX, maybe even some CAC or FTSE. We'll see. Okay. But also I'm going to take a look at crude oil and the Forex majors. But more of an intraday, because there's something going on with the dollar. And the CPI has been released 1 hour ago almost. Okay. We're going to take a look at the price action and see what that's all about, because it has to make a decision, the dollar, which is going to be decisive for the next swing. If it breaks out, I mean on the upside obviously, then we're not going to have, I mean, we're going to have something more on the upside as a correction for DXI, for the dollar itself, which means that all the counter pairs for the dollar, I mean, EURUSD, GBPUSD, AUDUSD, NZDUSD should most likely go down. Does not necessarily mean that the XAU, I mean, gold or silver will go down. No. There's a trick behind this, because if the dollar goes up, this means that the VIX can actually continue the spike and the indices could actually continue the fall that they just started. And yeah, voila, everything crashes, but the dollar gains strength as a safe haven asset, right? And USD JPY to fall, by the way. So, yeah, Yeah, okay. We have a question right here. Zarni, would you say pattern free is bearish? Is it ascending pendant, which is usually considered a bullish formation? It is a bullish formation, yes. But right now, where we, of course, all of them are. All three of them are. There are bullish formations. The first one is a complex flat. The second one is a contracting triangle. And the third one is an ABC with an ending diagonal in the C, but they're basically, it's a falling wedge. Depends on how you look at things, depends on how good you are with technical analysis. But yes, number three is, you know, it's not bearish, okay? It's bearish for the next move for gold, correct? I do agree. If that's the case, because if that's the case, then we have A, B right here, 1, 2, 3, 4, 5. But you can actually do this, right? Like here, and distinguish, because that's basically your B, that's your B, that's your A, that's your A, and then you have this 1, 2, 3, 4, 5, which is 1, 2, 3, 4, 5. Okay, will it give it to us? You know, not really. Okay, because I'm gonna do this again. Do this. Actually, let me for you guys to actually see it. Okay, you see this triangle right here. After the surge came the triangle, and now we want this, boom, right? Because 1, 2, 3, sorry, 3, 4, like, you know, this right here. It's the sequence behind it. Don't worry, guys. Okay, 3, 4, and then fifth leg, which makes this 1, 2, 3, boom, boom, boom. That's a big one, right? We're gonna have it. So, regardless of what will happen, I'm actually saying that after this move on the upside, I'm gonna be positioned for the bearish side. Why? Well, it's gonna end 5 ways on the upside, and I want to make sure that I'm in from the tops for me to be able to distinguish whether or not that's gonna be a corrective move right there. Until then, I will not know. But if I'm in and I position myself correctly, then I will know right there. I will obviously take some profit here at the wave 4 of a lesser degree, right about here, 1920. Okay, but actually even higher, between 1950 and 1920. But the point is that I will take some profit here because a reaction on the upside will be expected. I will actually, track these things. But we're talking about making plans before you make plans. So let's not do that today. Okay, let's just wait for the price action to reveal itself. Let's take one pattern at a time, as we always do. So the vote for today was basically free, had more, actually had, 1, 2, 3, 4, 4 votes. Wave 2, the pattern number 2 had 2 votes. Pattern number 1 had 0. So, which of these, I actually asked you before, but which of these do you prefer is basically, you guys, I mean, it is 4 versus 2. Which of these is actually the correct one? Well, as I said, I'm inclining to go with the contracting triangle because of this beautiful contracting, the contracting lines. So I will stick with that for now. Next, let's cover a little bit of silver. Okay, let's cover a little bit of silver because we have a potential leading diagonal here on the price action. I am bullish. I am positioned. Okay, of course I know what you mean. This can be A and this can be B, or whatever, and and then this goes here to the 78.6 before it jumps on the upside, so it can be like A, B, C, or whatever, right? But knowing silver, it might not actually do that. It might want to do something more dangerous than that. I mean, just basically go up, go down, bow, and there you go, right? So this move to surprise us. Well, I don't want it to surprise me because I know the way it starts, and this actually looks promising for the actual start. So yeah, pretty much. Now, guys, again, if you have any questions, just shoot them there in the question box, either on YouTube or whatever channel you're actually watching this on. This is a live stream, okay? If you're watching this later, just write your comments down below. I will do my best to answer your questions, or whatever comments you're writing in due time. So silver, again, just like gold, but you see, silver can actually shoot from here. I wouldn't be surprised of that. Okay, so still bullish with this. I know how the triangle might look for you guys, like ABCD. Hey, look at this guy. He's labeling this, like this, and he's labeling this like this. Well, don't forget about the overshoot on. Actually, it's not even that. Okay, don't forget about the overshoot right here on the E wave in a triangle, which is usually doing SPX early. Okay, no problem. We'll go on the indices next. Okay, but before we do that, let me just say a few words about crude oil. All right, because I do believe, look, I do believe we're gonna have a correction on the upside. However, yes, the next move, in my personal opinion, is up, at least until the next Elliott wave does. But there's something about it, okay? Crude oil, when it drops, and from what we noticed and what we witnessed before, obviously, don't worry, I had some limit orders right there that didn't get filled because price action. I was actually expecting more on the upside, just because, just for the ones who actually are new to this live stream. Yeah, this is the only one basically that didn't give me any entries or something like that, because I was expecting in this fifth, I was expecting that overshoot to hit 46 or something like that, and then start crashing. Does that mean that I was expecting I was not expecting? No, obviously I was expecting it to crash, sell orders, right, and to actually go and die. But what's the next move? Well, for WTI, for crude oil right here, West Essex Intermediate, I would be expecting a correction in this B wave. Okay, well, but here's something that I want to say, because from what we noticed on WTI, this thing doesn't even give a correction, just drops. Okay, so be careful with this. Right? Yes, the next move should be a buy when you actually look at things intraday wise, but should be placed at break even immediately, because you don't know. Look at this moving average 200 DMA, right? Right there. Now it can actually shoot it on the downside, right? So it can either be that, or the B wave might just be like a triangle or something, or a complex flat, or even a running flat, So yeah, be careful, crude oil. Be careful, crude oil. But yeah, the next move should be looking bullish because of this bull flag. So let's not, let's not ignore these signs, intraday signs that it's telling us. And it's not a coincidence that crude oil is actually pointing on the upside. I'm gonna go next on the indices. So let me start. Okay, we have, regarding oil, we have a question from Oleg. Option buyers waiting on 34.50, 34.10. Sellers are on $46, $48, and some sellers 40.30, 41.40 in the middle. Yes. Yep. Let's check these levels once more for Oleg. Yeah. Yeah, well, obviously buyers are expecting a better price, obviously, yes, but it's the sellers that I'm actually interested in, Oleg, to be honest with you, which is 40.30, yeah, which is basically the moving average right there and the range. But as the moves will actually unfold, don't worry, guys, we'll still be able to measure this with you know, with a specific fib, right? So 40.65, something like that. I might have a different price than you, okay, because of the spread or something like that. You might have a different price than me. Maybe it's you know, higher on your side, right? The price, I mean. So yeah, pretty much. Yep, I did read your mind. I okay. It seems like, yeah, we're on track. Now, let me just continue here with the indices. All right, because I've been bearish and I've been publishing these, you know, sell orders and all days for. Let's just start with the US first. Okay. Do they really need to do the fifth wave? Well, not necessarily. That's the point, guys. Okay, not necessarily. Um, you know, you guys know. I mean, 2 weeks ago, or no, 3 weeks ago, I actually published those, you know, trading videos and stuff like that. Then I followed them up with the sell orders and everything for the US indices and for the EU indices and stuff like that. So the levers are actually exactly what you see right here. Nothing is, you know, made up, or everything is real transparent, just the way you guys like it, just the way I like to actually serve you guys here for free on the YouTube live stream. So you know, I'm actually positioned well right about now. I do have a fractal right here, which is basically what you see. This is something new from the previous live stream. Yeah, why? Why do I have this fractal right here? Well, let's do some of that voodoo magic that you guys love, right? Right before we actually, you know, continue. So, US 30. Now the pattern that I'm taking is, let's say, let me just go on Dow Jones US 30 here on the daily time frame, right? How did I know that we're gonna actually have we're gonna be preparing to actually fall into something right here at the tops, right? Well, I've been tracking these. I've been taking a look at these pattern, right? Which is basically February, October 2018 fractal. Because I've seen this and I said, okay, we're most likely doing that fractal from that. Yeah, well, you need to have your eyes formed for this type of things, but it comes to you in time. Don't worry, okay? If you're watching this type of, you know, sequences and stuff like that. So I took this, right, and I basically compared it with what happened in the past, right? Now, I'm gonna do it live with you guys right here, okay? So let's just go back here on the price action, bow, okay. And what I'm gonna do is just use this tool on TradingView, and I'm going to take it, right, as you can actually see right here, take it from there, drag it all the way down, all the way to our current price action, right? And it's gonna take a while, but I'm gonna make it very small. Okay, thank you very much for your patience. I'm not gonna do this with all of them, just with Dow Jones, because if Dow Jones does, if we agree on that, it's basically the same. So you can actually see it's practically the same pattern, right? So let me just place it here, and okay, we need to arrange it a little bit. This takes a little bit of whatever, but you know, you can actually see what I mean, right? So let's just do this, right? First, we have that, which is basically this correction, big one, boom, right? Some sort of diagonal, right? Bigger correction, bigger correction. This, right? This is what I've been tracking while it was actually running on the upside right there. Okay? This is why I posted the sells, right? But right after that came this pattern, the one on the right, October, December 2018 fractal. And interesting, right? So let's now do this, right? I'm gonna go. What did I do? Okay, it's okay. Let's just go after that, right? And after that pattern, after a February, October 2018 pattern, I'm going to take October, December 2018 fractal, right? Just go there. And I'm going to place it right here. I'm going to move as fast as I can, okay? If you're watching this later, you can basically just, you know, put the videos through, I mean, the video on 2 times speed or something like that, right? So, look what I'm going to do. I'm going to copy it, right? Now we're going to go on a smaller time frame, 4 hours, and paste it here. Boom, magic, voodoo, right? Oh yeah. Take a look. Take a good look at the sequence. That's the most important thing, okay? Doesn't matter if it's not the same, it's the sequence behind it. That's how fractals work, okay? So let's just place it here, okay? And I'm going to place it on the right, even though you have it right there on the downside, right? But I just want to do this live, so you don't think that BS or something. I'm just mumbo jumbo, right? So, boom, correction, boom, boom, correction, boom, up, up, down, down, ooh, 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 right? Up, which means up. Well, this means it's capped at 61.8, bow, right? Very interesting, right? So now you see why in the previous sessions, in the previous live streams and stuff like that, now you see why I was actually saying that it's very, I mean, it's a good idea and it's important for me to be positioned right there at the tops, because the sequence following that on the downside could be a big move down. I mean, really bearish. So this means that, you know, if you were active here and you've been following me, which, I mean, most of my members are, and the ones who are having private sessions with me are, obviously, all of them are, most of them are actually, you know, zero risk right now, stop losses at break even and stuff like that. So it's cool, right? We don't have, I mean, we have nothing to lose, because, but the point is that if this hash actually starts here, and we actually start, you know, dropping, right? It's a C wave, and it's big, and it's most likely going to be minimum 38.2 retracement of the COVID relief, which is basically March. So basically from March 2020 until now, you know, September 2020 top, we're going to have at least 38.2 retracement. Do I believe it's only going to be a 30.2 retracement? Not really. I'm actually inclining for 61.8. Well, why? I will show you on the next charts. So let's rearrange these things. Okay, cool. Boop. Let's move on to the next one. S&P 500. So the most important things, you actually saw them. I actually, you know, because there's no point of me doing the same thing on S&P 500 or NASDAQ or whatever. The same, you know, fractals, October, December 2018. So basically this entire ending diagonal, I mean, this entire diagonal is the pattern from February 2018 until October 2018. What I'm actually seeing here is basically potential pattern. October, December 2018. So in your own time, you can take a look at that, right? You can take a look at the charts, see if I'm right or if I'm not, if you agree or if you do not. So S&P 500, same thing, just like that, right? You actually see the sequence right here: fall, rise, rise, drop, drop, boop. Ooh, right? Ooh, we need this to tag this top. There's one trick. It can have some power in it. Not seeing any questions, guys. Not seeing any activity in that chat room. I mean, not the way I want to. So, come on, guys. I know you're listening. I know you're watching these labels. I know you're watching these labels and stuff like that. Come on, right? I know the fifth wave might not come. That's the whole thing about, I mean, that's the entire thing about these indices and the live stream that I'm doing today and stuff like that. The fifth wave might not come, guys, and we might be capped right here in a correction and then boom, right? On the downside. Remember, I was not, I mean, no, the next move should be up, obviously, right? Why? Why? Because, you know, if you take a look at this to be this, this to be this, right? You still need the move on the upside. So yes, intraday wise, it would be a buy, going up, right? If you want to position yourselves right there, obviously stop loss here or here, depending on your risk appetite. Just, you know, enjoy this move up, move it to break even, obviously, and then, you know, look for shorts. Because why? It cannot, I mean, it can stop at 61.8, but it can also move all the way up to 70.6, 88.6 range. Okay? So if you're shorting it here, it might have this range. I mean, you have to sustain this for a while. Remember, there's still the possibility for this to be a fourth wave as well in a you know, complex triangle or something like that. How can it do that? Well, that's why that's just what I said. This move up can extend itself. Okay, this doesn't mean that we're not going to have the fall. We will, but still going to be like a fourth wave or something like that. It can still do that, right? So you need to understand that intraday wise, for day traders right here, I would actually say that they will be most likely turning bullish. Is that a high probability trade? Well, come on. None of them are really high probability. I mean, some of them are, but I would say medium probability, right? There's always a risk involved in everything that we do. And this is obviously a verbal disclaimer besides the written one that we always do. Trading is not for everybody, obviously. There's money involved, there's risk involved. You can lose your money, we can lose our money by trading and stuff like that, right? This is not obviously an investment advice, it's just market research, market commentary, call it whatever you want. We're all grown men, we all know what to do with our own money, how to put it, how to place it, how to risk it, right? So there's a risk involved, we can lose, we can win, whatever. Yeah, that's it. So let's just continue that we have that out of the way. So intraday wise, what would I be expecting? Move up. We will see here at the 61.8 what's cooking, because it can really drop on the downside. Do I want it to drop on the downside? Oh yeah, because remember, I was bearish from these levels, 3,500, 3,585, which was, you know, pretty amazing. I mean, this was top notch on S&P, right? This level, boom, immediate reaction. So I want, the pattern that I want is up, boom, down. And probably we'll follow up with this into our next live stream session here on YouTube. But if you want to trade this with me, if you need any trading assistance or something like that, just shoot me a quick message. Links in the description, everything you guys need to know. Okay? Next, and let's hurry up a bit because we only have so much time. NASDAQ, all right? You can see that NASDAQ out of, you know, unlike US 30 or SPX, it's below the trend line. I mean, it's below the channel, so, right? Look at this. It's actually, I mean, this fractal is actually gaining confidence because of that, because it has broken, has breached. So, whew, yeah. Well, most likely, in this case, this is either this or it's gonna do some sort of that and then boom, and then drop, right? So it's pretty dodgy, guys. It's pretty dodgy because this fractal is really you know, growing on me right now, like that, right? You can see it. Okay. So yeah, trade with care, trade what you see. That's the point. Big move on gold today. What's the move on gold? Let's just see. Is it happening? Oh yeah. Ooh. Yeah, exactly what we want. I am actually, you know, you guys know, I'm actually positioned bullish. Bullish for that. 1945, 1910. I wanted 1930 for that to actually, but that's still a possibility. Don't worry. Okay, it can still drop like that. But frankly, I just don't want it to. As I said before, I just want this pattern to be, over with, because I've been tracking it for quite some time, and that's the thing about corrective patterns. One line 20 becoming a little bit less probable. Correct? Yes, Zarni. Yeah. Cool, bro. I mean, yeah. The more it moves up right now, the less confidence the bears will actually have. And I remember some of some traders in chat rooms and everywhere I'm actually active. Um, they're quite keen on 1940. I don't really understand why, because you know uh, there are at least three bullish patterns pointing on the upside. Only like two, but one is a very good big question mark. So yeah, we'll see. I'm not saying it's not impossible for gold to actually drop, but you can see the current price action, and if it was supposed to drop, guys, it was supposed to actually do it already, right? We had the CPA, um, sorry, CPI released for the US dollar today. It was 0.4, point 0.4, which was good, green, higher than expected. Dollar should be gaining, should have been gaining strength, but it's not really, gaining strength. So we'll see. We'll see what the dollar index is actually up to. We'll leave the forex for now. Let's just continue what I wanted to say with Nasdaq. Then I'm gonna go on the VIX, and slowly we'll finish these things up with the indices. So for the Nasdaq, yes, indeed, we do have a reversed bullish divergence right here, okay, from these to these. Um, but we also have a correction in plan. So this, this might be just, I mean, this reverse bullish divergence to be just a temporary thing before that, right? So Nasdaq, as I said, unlike US 30 and S&P 500, has broken through, has breached the lower trend line, which is, I mean, in any technical analysis way you will actually look at things, will most likely bump its head into this in the back end, on the back of this trend line. So yeah. It's interesting, guys. It's interesting what's happening, because we might have another fall, the correction we need. And by the way, let's just make things clear. I'm not calling a market crash right here. If you want my market crash views, there's a YouTube channel right there in the trading videos playlist. I actually made a sequel of three, three videos, right? Three parts, from macro to medium to short term as well, in which I'm actually calling this drop as well on them. Don't worry. So the point is, how am I actually going to see this? Well, I'm not seeing this as a very significant move like COVID or something like that. We'll need to track it though. Okay, there is a possibility that it can be, big as well, but it's not high probability. So what I would say is that a retracement at least 3.2, especially on Nasdaq, 3.2 retracement of the entire move on the upside from March until September 2020. Yeah, so March 2020, September 2020 for all indices. Look for 30.2% retracement or 61.8 retracement. Look for that, and after that, I would actually be going bullish. Why? Because the pattern that I'm actually explaining in those videos is a double free WXY with a triangle in the Y. Well, this will be the C wave in a triangle in the Y. Maybe it doesn't make any sense, but for those who know what I'm talking about, you know exactly what I mean. Okay? So the Y is a triangle running, contracting triangle, or for other indices such as Dow Jones or S&P 500, it's actually a barrier triangle, okay, in the Y, because the Y is terminating with a triangle just like it did before on Dow Jones, between 1966 and 1980s. In case you don't know what I'm talking about, I'm going to show you. Okay, so again, this thing right here. So this is the period that I am talking about. 1966, 1980s, right here. Okay, this one, this little box, because it's happening right here, right now, guys, in our present times. We had a WXY. Okay, now we're in the Y, we're in the C for the Y. So basically, we had W, X, A, B, C, D, E in a barrier triangle in this case for Dow Jones. So how am I gonna basically be looking at things? There's a video in which I'm actually taking this. I'm going to the weekly chart, comparing it to this, comparing the patterns, giving you multiple examples to be actually believe what I'm saying and not just think that I'm all about mumbo jumbo here doing voodoo on y'all. I'm not. So yeah, I would say that we're doing that triangle for the indices. This is indeed a 4-hour time frame, but if you go on the higher time frames, you will actually see what I'm talking about. If you go on the videos, you will actually get a clearer idea on what I'm talking about. Do I want them to move up, and I mean the indices, do I want them to move up and basically hit resistances and something like that? No, the earlier they fall, the better it is for me, because I'm actually positioned on the downside and stuff like that. So I don't care. I mean, in any type of scenario, I'm still gonna maintain the bullishness, the bearishness, and yeah, because the VIX, right? Let's just move on to the VIX. The VIX has been spiking, just like I actually sounded the alarms here. I mean, when it was actually contracting, I say, oh, there's a possibility that the VIX will spike, and explained to you guys in the previous videos and everything that I did. So yeah, spiked, right? I was right. We had the VIX spiked on the upside, indices started falling, right? So yeah, pretty cool, pretty cool. Now, what would I be expecting? Well, do 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 do. Boof, boof. Yeah, that's what I would be expecting, right? Because I'm treating that former fall ending diagonal like this, yeah? I mean, this spike to be this, right? Correction, correction, then big impulsive swing on the upside, most probably to touch this, but I would actually say that it wants to touch some fibs right there. 61.8 will actually push the indices very low. So yeah, that's what I'm waiting for. And then of course, drop. So indices reviving. Pretty much that's the recipe. So if you need help with this these indices, guys, just let me know. Now let's move on to the European indices, because I know that there are some DAX fans right here. I'm on the 4-hour here on the DAX. So let me just show you a couple of patterns as well on DAX, right? Before I do that, take a look at this. I mean, the fractal is November 2019, February 2020, right before the COVID, so the big drop, right? And I've been able to notice this in this type of sequence right here. Some may call it a megaphone pattern. Some of them will actually call it an expanding triangle, whatever, right? Doesn't matter, as long as it works, right? Whatever makes money. So I noticed it here, but it's also happening here, right? You can see it. Yep. So in this sequence, let's just compare these two for now, right? Let's just compare them. So in this sequence, we had up, down, up, down, up, down, and obviously we're expecting the up, down, up, down, up, down, and obviously we're expecting the up, right? Just like here. Because this one is actually this one, okay? This one happened way before COVID, right? So it's not, this one is not the same as this. Don't worry. So up, down, and the final move, which we're expecting here. I mean, regardless of it, if it drops here and then goes up, I will still be expecting one more move on the upside. Why? How? Okay, let's just go on the higher time frames for me to illuminate what I'm actually planning to say. So the same pattern that I've shown you before, okay, this one, right? Fractal. There are many fractals right here, okay, don't worry. But you can actually, take this, take the sequence behind them. You'll see that, they're practically, the sequence for them is actually the same. So this is actually this one, right? This is a different fractal from a different stage. But okay, let's just focus on the one that DAX likes to do right before a major reversal, right? And I took that pattern, February, May 2018, to do this, to, to have that, and so on and so on and so on, right? So let's just do some magic now. Obviously, I mean, if I take this, right, and place it here, I just clone it, right? And then I'll just make it very, 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 very small, which is a hard thing to do, but hey, So then we'll just copy it, go back to our 4-hour time frame, and just paste it there to see what it looks like, right? Yeah. And you'll basically notice what I'm saying. So you can actually see that this is actually this. So let's not bother, okay? Now let's go back to the other time it actually did this pattern. So we can do the same thing once more. Before we do that, let's just get rid of this because we don't need it, okay? Let's just go on the daily time frame once more and show you where I've noticed that pattern before, right? So take a look at this, take a look at this, right? Because this is this. Okay, so now let's take that pattern, right? I know it's not going to be the same. Don't worry. I know what you mean. It's not, oh, Richard, it's not the same pattern right now. It's not happening, right? Well, no, it's the sequence of it, right? It's the sequence of it. Have no worries. Okay, this is really, really hard to do. Okay. So, copy and paste. Boom. Yep. I know it looks slightly different, but the sequence of it is actually the same. It's not a megaphone pattern, this one, but the sequence of it is practically the same thing, okay? In which case, okay, this has failed to make a higher high than that, right? And this has made a lower low, right? But we're still on track with these, right? After that. Can they drop right here, right now? Yes, all of them can. Can the VIX continue the actual the actual spike? Yes, of course they can, right? But what would I actually be looking at when it comes to a higher probability trade? Well, I would be looking at a move on the upside just to connect these, right? For me to have that I want, right? Because the pattern is, from the other one that I actually shown you, which is, let's go back there. Okay. So the pattern is basically between January, November, okay, November 2017, January 2018, right? That's basically the pattern. As you can see, I was actually, ready back then as well on DAX, shooting for these type of, shorts and stuff like that. Bullish correction, false breakout, boom, went down, then boom, quarterly, bearish, 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 shooting, boom, 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 down, 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 and then right after that, I actually posted, this is on a higher time frame, obviously, but I was actually looking up after that, and then shooting for the downside with these, and I have some other stuff in which I'm actually, but anyway, all this stuff are either private or some of them are public. You'll be able to see how I actually called the, tracked and called the actual COVID drop as well. Okay, so that's basically what I wanted to say. What's the next direction, Richard? Because you're always like, you continue talking, but are you going to give us something? Well, I just did. Yes, of course. Of course I'm going to give you something. I always do. right? So I'm expecting a move on the upside for the indices. But as you can see, DAX is not allowing, um, a bullish move on the upside, then more of a continuation on the upside. So that helps with correlating with the US indices, right? In a sense that if that's the reason why I spend so much time on DAX right here, okay? Because if the DAX runs on the upside, okay, that will be the move on the upside for these indices as well. But guess what, right? That's what we want, this. So this means that this fractal is in play, right? I mean, this fractal is in play. And boom, they all drop right after that. So yeah, pretty much. I'm receiving some messages, guys. I'm on the YouTube live stream. Okay. Yeah. Let's just go with Bitcoin just a little bit because I had some requests right here. Just gonna cover it quickly. All right. We hit the top right there. Okay. We're doing an AB and then the C wave right here. Now, knowing Bitcoin, right? Knowing this one, it might just go there and then just tank with the indices as well. How can it do that? Well, yes, I'm going to explain. Just the way you see it being labeled. A, B, and then this is 1, this is 2, 3. Okay? So watch out for that, guys. Yes, the next move should be up. We do have a potential bull flag, second leg, forming right here. We want to actually go on the upside with BTC USD Bitcoin dollar. But be careful, right? The next move should be up. So for indices, intraday wise, very short term wise, for a few days or something like that until next week. Um, Bitcoin, uh, crude oil, indices, all of them, right? We're looking up for now. The bigger trend should be on the downside. So yeah, that's pretty much it. We went over WTI, we went over silver, we went over gold as well. I believe it's time to go on the Forex pairs. Before we do that, okay, I'd like to know if you guys have any questions, because if you do, if you have other requests, something like that, just write them down while we're here, while we're live. Write them down in that chat box section, okay? So go ahead and just do it. But um, before we go live right there, I mean before we continue with the Forex majors, I know that some of you might not be so keen on that, but guys, today is September 11, 2020. Almost exactly at these current times, 19 years ago, there was a historical event in which some lives were lost. Now, this is basically a historical event which actually changed our lives forever. Not only our lives, but also the markets as we knew them before. So, without further ado, I'd like to kindly ask for your patience, because we're gonna have one moment of silence um, in memory of the lives lost as a memorial event. Thank you. Thank you. Really appreciate that you guys actually, you know, stayed along, right? So let's just continue. Dollar index. Okay, we had the CPI released. It was good for the dollar. Now the dollar should be going up. There's something going on. Something fishy going on with the dollar, bro. Because whew, this should be a, um, I mean, the sequence of the dollar right here. This should be a running flat. Okay. So that being said, if it is a running flat right here, okay, we should be going down, and this should be wave 2 or B in the ending diagonal, right? A, B, C, 1, 2, 3, 4, 5, in a fifth wave. Because remember, we're expecting the fifth wave on the downside right there for the dollar. Can it just shoot here? That's the only question. Because if it does do that, then this means this 4 is here, but I don't really, I mean, if you guys can help me with this and tell me, how would you label this as a fourth wave? I mean, to top here, and then this very, very small thing compared to this as a wave 1, and then this very long wave 2, just to have this as a fifth, you know? It's a big question mark for me. So I'm not gonna go basically, I mean, jump the gun here, or with saying that the fifth wave is over right here. It can't really even be. It cannot even be an ending diagonal because the sequence of it is way too dodgy. So I would actually say that in either case, I mean, in the worst case scenario, this is just extending like that to create an expanding flat. But don't see that neither. There are still good chances for the dollar to deliver this fifth leg down. Because let me tell you why I'm actually saying that. Because if it starts dropping, which it did yesterday, okay, I was pleased with after that diagonal that I mentioned previously in the last live stream, right? We had the fall, right? It came. So that said, yeah, that being said, what would we be looking for? Well, I would be looking for this hit the 78.6, 88.6 fib retracement, okay? If it does go higher, well, it should be going just like this, like that, like this, and then start falling hard. So it can actually be a diagonal right there in case the C wave is extending 1, 2, 3, 4, and then fifth leg. Yeah. So 1, 2, 3, 4, 5 in the C wave for this, ABC. But regardless of how you label it, this, right? Because it can be labeled as an ABC right here. It's okay, right? In a WXYXZ in this B. Because it can. It's still corrective, guys. Look at the channels and stuff like that. Come on, let's not be rookies right here. Even though you might be looking at this W and say, look at this guy. He's living a W right there. Right? But it's not about labeling the labels itself. It's about the sequence and how you label the sequence. Your labels can be wrong if where you look in the sequence of your direction is correct. Have nothing to worry about, because at the end of the line your wave counts will meet at your fibs and stuff. So yeah, I'm gonna basically because on the USD Swiss I'm already doing that AB and stuff like that, right? But it's cool. So dollar index, what would I be expecting for this and next week, right? Correction, I would be keen on seeing if the fifth wave would actually occur. Because if it does, right, there are trades available. Not only, let's say for instance on the euro dollar, right? Not only the buy for this, but also the short, because the short is more, guys, the short is much more important for me right now. I mean, for me. I just want to see how fast can the wave 5 go, right? Because this is going to be the fifth leg. We have 3 right here, and just like the dollar index, you can see a running flat right here. Okay, it's a running flat. So like here, W X Y X Z. And don't tell me that you don't see the spike. Don't tell me that you don't see this correction. Don't tell me that you don't see this possibility for the upside. Come on, right? Let's take one, as I said, one step at a time. Baby steps, slow and steady wins the race. For those of you who are keen on buying the EURUSD, if you're super aggressive, then obviously your next trade is this, stop loss here. If you want to give it, because it can do a proper correction right there, like this, like this, like this, and then boom, right? Like this, because Euro really loves that those type of flats in a wave 2. So yeah, so short and steady, up, big down on the Euro USD. That's basically what's on my radar for the euro dollar. For the GBP USD, well, this thing is obviously invalidating a wave 5 on the upside, right? In my personal opinion, we hit the tops already for GBP USD. It's just a matter of having a correction at this, take a look at this moving average. Boom, we should be, dropping really, really, really hard on that right there. Okay, so pretty much. Now, the way I'm labeling this fall is basically an AB running flat in the B wave right there, red minor degree B, which is basically this one. Yeah. So after that, a 5-wave sequence. But I was actually saying that maybe you finalize the leg here, but I don't think so. I think that we're basically just getting started. 1, 2, 3, and check this out. 4. Right here, running, contracting triangle, whatever it wants to do, flat, whatever, right? 5th leg, last leg down. And after that, correction to start, which means that if this A is here, this B is here, this move on the upside would mean that the GBPUSD would have the strength necessary, but not provided by the GBP itself gaining strength, but provided by the dollar losing ground. So, EURUSD up, GBPUSD up. Guess what's next? Bow, big fall on the GBPUSD. Cool. How would that translate? Well, if that happens, if the dollar softens and stuff like that, obviously indices, there's something tricky here, okay? Because the dollar doesn't really need, if the VIX spikes, the dollar doesn't really need to go up. It can also go down along with the indices if there's a major event happening. And we have a lot of things in the pipeline, guys. We do have for this month. We have a lot of things on the pipeline. So that's why I'm saying that, yes, I do see the C leg on the upside for the USD JPY, which would most likely provide a bearish outcome for gold and bearish outcome for indices as well. But, yeah, there's always a but. This pattern on the 4-hour time frame, this can be noticed on the weekly time frame as well in a WXA. When I said that the USD JPY will tank back then in October 2018, when we started really falling with indices, with the USD JPY and stuff like that, right? And we started the bull with gold slow and steady. So I would be expecting this to be a complex flat, guys. Okay, in which case this is A and this will be B. WX Y, right? Where's the bottom for that? Well, 78.6, 88.6 Fibonacci retracements of that. Then then bull. Now, allow me to explain to you why it's so important. Why would it be so important for me to be positioned here? Because this move might not just be this small. It can be really big on the USD JPY. So just keep that in mind. I'm going to follow up with that, obviously, as the trends will actually occur. Next, USD Swiss 2-hour time frame. Okay. For the USD Swiss, unlike the dollar index, it's actually falling harder. So this is actually telling me that we are actually, doing an A right here. Okay. let's not be rookies and say this is 1, 2, and then 3. Take a look at how the 1 started first of all. Okay. Let's basically say that this is ABC A, because we're allowing an ending diagonal. ABC 1, ABC 2, ABC 3, 4, 5, boom, right? A, B, C, sorry, A, B, C, 1, 2, 3, 4, 5, boom, boom, bow, up. Once we finalize this fifth, believe me, guys, USD Swiss has a big trade up. So the next one is basically up. Now, next one, USDCAD, same thing as the USD Swiss. Last move down, fourth wave in. I don't know exactly if the fourth wave has finalized right here or not, or if it wants to extend, or this becomes a W, and you know, whatever, right? We'll still be able to keep tracking it. Hence the reason why I said on the WTI we might have this. You can see something starting right now. We might see something on the upside right here, which makes USD-CAD going basically down, right? So let's go back on USD-CAD right there. And USD-CAD basically to go down like that, while the WTI retraces on the upside. Makes sense, correlating. AUD-USD 2-hour time frame, similar to the GBPUSD, but also the EURUSD in the same time, and NZDUSD actually will mold with AUD-USD right here. Can they still do something higher than this? Yes, they can, but they have to do it now, because if that's correct, then wave 5 has not finalized here. It will be here, okay, in an ending diagonal. How? Well, in an ending diagonal, this will be 1, this will be 2, because this has not hit something like this. It has not invalidated the upside yet. Only when we see something lower than that, which is basically 0.7132, okay, that's when we will say AUD-USD just entered the bearish territory. Until then, it still has a chance to do this 1, 2, 3, 4, 5 in the diagonal, and then after the dollar index will finalize its leg on the downside, only then AUD-USD to actually drop. Okay, so yeah, invalidations. Well, yeah, even here, let me just delete. Okay, even here, invalidations for the upside at this current bottom, because if that's the case, this is 1, 2, and this should be A. Whatever it decides to do here, I mean, come on, it's a B wave, right? It can also be a running flat or whatever. It doesn't really matter. Okay, let's just watch it to see what it wants to do. The next move should be on the upside. The bigger move should be on the downside, just like all of them. Next, NZDUSD. Let's just take this quickly. Okay, similar to AUD-USD, we have here either wave 5 has finalized there, but if the dollar actually falls right there, just like AUD-USD, it will extend in a diagonal 1, 2, A, B, C, 3, 4, 5, and then big move down, right? That's basically the recipe for all this. So we covered today. We covered the metals, we covered the indices, US, EU, we covered a little bit of Bitcoin, some WTI, crude oil, Forex majors, and I believe that we're kind of done for today. Just before we go, if you guys have any questions, or comments, just keep them active right there in this question box. Otherwise, we will be done. We're gonna take a last look right there. Okay, Travis, see you later, bro. We'll keep in touch. Just hit me a quick message whenever you have the time. Yep, Swissy 0.92629306 area sellers, and 0.8898, 0.8818 buyers. I'm going to sell the rally. Cool. Yeah, you see. So yeah, we're basically on the USD Swiss. Yeah, let's see those 0.8898. Yeah. Yep. Okay. I don't know what to say, Oleg, but just watch out for what I said, okay? Because the more it moves down, the more it's basically, if it's really deep on the downside, although it doesn't really have to be that deep, but you know the rules of Elliott wave, right? Anything lower than the previous lows, which let's say is, as let's say sentimental level, anything lower than 0.90 can actually confirm the fifth wave is done, and we can go lower. So we're not basically that far away, but according to what we see right now, I mean, according to what we see right now, this could be one. Okay, this could be two, three, four, five. Boom, the diagonal that we want, and then bow on the upside. Anyway, this range is D1, the key for that. Yep. So no more other questions. Thank you very much, guys, for tuning in today. Thanks a lot for your attention. Thanks a lot for joining me live again on YouTube every week. Don't forget, every week, every Friday at 1 p.m. UTC time. So that's basically 9 a.m. Eastern time and 4 p.m. Eastern European Standard Time, wherever you are in the world. Thank you very much, dear Elliottians, for tuning in, for jumping on board here. Should you need any of my assistance or you have any questions, just shoot me a quick message either via the website or the Telegram, Skype, whatever you have me on. So yeah, I'm gonna keep tracking this markets, provide you guys with that live Elliott wave dose that you guys love so much. It is a pleasure for me as well. Once again, thanks a lot for joining. Until next time, as I like to say to all my traders, stay in the green and many pips ahead. Bye for now, guys.